guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a brand new week and looks like it is going to be a good one for the markets, given the fact that the GIFT Nifty is hinting at, a start above that magical 22,000 mark, which we have been waiting for quite some time. But of course, lots of cues to watch. Earnings from HCL Tech, Wipro, DMart to digest. We also have a deal announcement from Tata Consumer, and of course, the stock will be in focus on the back of that. And of course, we'll also be taking up all your stock-related queries. So if you have any queries, send them in to us on our YouTube feed, and we will try and take them up with a technical expert on the show. But before we move any further, let's take a look at the top headlines at this hour. Wall Street ended mixed on Friday as bank earnings largely disappoint. Dow ended with losses while the Nasdaq and S&P 500 eked out minor gains. Meanwhile, Asian markets are largely mixed, but the GIFT Nifty is hinting at a start above that 22,000 mark, a fresh record for the market. Crude sees a sharp surge on Friday with Brent briefly hitting that $80 per barrel mark. Gold, meanwhile, also shines at a one-week high on safe haven buying amid simmering tensions in West Asia. IT stocks are poised to extend Friday's rally after big tech beats muted expectations in Q3. HCL Tech leads the pack with a 6% revenue growth. Wipro reports a steady quarter, and the management says that there are green shoots in discretionary spending. Tata Consumer announces the acquisition of Ching's and Smith & Jones brand owner Capital Foods for 5,100 crore rupees. It is also set to acquire Organic India for 1,900 crore rupees. Management, in fact, in an exclusive chat with CNBC TV 18, said that it is confident that both acquisitions will create huge value for shareholders. And the World Economic Forum's annual summit in Davos gets underway today. Elaborate discussions on key issues like cooperation amid rising geopolitical tensions, harnessing artificial intelligence for the benefit of all, and a long-term strategy for climate, nature and energy will be high on the agenda. Well, before we take up all your stock-related queries, let me, of course, introduce on the show our technical expert for today. Joining me is Jay Patel, who's a research head at Head-Investmentor Securities. Welcome to the show, Jay. Great to have you. Looking at the Nifty, of course, IT stocks provided a fillip, and we hit a fresh high on Friday. We've been waiting for that 22,000 mark patiently since, the end of 2023, really. But do you think today is the day when we will manage to clock that level? And aside of that, how do you expect Nifty Bank to behave in today's session?
So good morning, Nandita ma'am. So definitely today we are expecting opening above 22,000 mark. Particularly if we look at Nifty options data for Wednesday and Thursday, they indicate around 1.5 crore positions on shorter side. So definitely there is a long position, particularly short covering really we can expect on Nifty. Today after gap up opening of 22,000, today after opening of around 22,000, we can expect a rally towards 22,100 because as call writers position are very heavy on 22,500 mark, following 22,400 and 300 mark. So definitely there is the option writers position indicating we can have a good opening, and particularly this week would be a good all-time high. We can see a new all-time high positions, particularly on Nifty and Bank Nifty. Also we can see a similar rally, particularly because stocks are almost in breakout zone if we talk about major banks, ICICI and Axis and even IndusInd Bank. So definitely we are expecting a good start for a week with options data particularly indicating towards fresh high.
All right. Speaking about the IT index, of course, a sharp surge coming in on the back of a rally in the likes of Infosys, TCS. In fact, the entire IT pack was buoyant. Today as well, we will be having HCL Tech and Wipro react to their numbers. Wipro ADR, of course, rallied somewhere around 16% post the earnings. Do you think the rally in the IT stocks are expected to, is expected to continue, or do you think IT stocks have entered an overbought zone right now?
So if we look at Nifty IT's weekly chart, definitely there was a beating down, particularly in Nifty IT index, and it was consolidating since past 2 or 3 weeks. On a weekly chart, we see a flag and pole pattern breakout, particularly after Friday's up move. Today, we also can see a follow-up up move for Nifty IT following the Wipro's and HCL Tech numbers. Because the Wipro IT stocks were beaten down, particularly for bad results, and now the results are on flatter side, we can expect a good up move again towards its all-time highs, that is around 38,500. So we can definitely see another move in today's trade following HCL Tech and Wipro's numbers. So I'm still bullish on Nifty 18. We can see a major up move coming in this, particularly 1,000 to 1,500 points up move coming in this index.
Right, that's the view, of course. But let's talk about the stock of the day, Tata Consumer. It has announced that it will be acquiring Capital Foods as well as Organic India. Now, Tata Consumer will be buying 100% stake in Capital Foods for 5,100 crore rupees. And of course, 100% stake in Organic India as well for 1,900 crore rupees. In an exclusive chat with the CNBC TV 18, the management has said that, the entire transaction will become EPS accretive from the second year. And, the management is also confident that both the acquisitions will create significant value for shareholders. If you look at the stock, it's perched at record highs, Jay. Going forward, if somebody is invested in this particular stock, would you advise them to hold on, or would you say that it's time to take some profits off the table?
So I would definitely suggest to keep holding this stock, because if we see the if we see the charts, definitely high low pattern is clearly visible on the chart. And if we see a little on the fundamental side, we can see the Tata Consumer is adding new products and they are introducing the new website, particularly even for the cold pressed oils and particularly the Tata Sampann products, their product line. Particularly even they are investing in Fab India, Organics India, Ching. So definitely they are adding new products. And they are also diversifying the business, particularly from the smaller segment to higher segment, particularly to oils. So I believe Tata Consumer is a long way to go, and particularly at this level, I would suggest to keep holding this stock, because we saw a good breakout coming in after 1130 levels, and the stock has very much sustained 1000 levels since past a few weeks. So I would be very bullish on Tata Consumer Products. And Q3 numbers, if we look at Q3 quarter, the demand was quite low, particularly for FMCG products. But I believe Q4 would be a good start for rural economy as well as for the urban economy. So Tata Consumer will be well placed off to go above 1,300 levels in very short term. So keep holding this stock, and I would suggest if anyone can add at this point, you can definitely add for a longer horizon. Tata Consumer would be something I would be bullish on FMCG stocks at this level.
Right, but what about DMart? Reported an inline set of numbers. Revenues were largely inline, profits slightly above, if you may say so. But it's a store addition that has lagged estimates. Given the fact that this stock has underperformed largely over the last 1 year, do you think any weakness on the charts should be used to buy for the long term? And if one is a short-term trader, how should one approach this stock now?
So if we look at DMart's daily chart, the stock has been taking a good support at around 200 exponential moving average, and the hurdle is definitely visible at 100 exponential moving average. So the range is definitely suggested at these around 3,400 to 3,840 levels. So the range is intact. But I believe if we are looking for a positional point of view, definitely you can add at current levels. But if you are looking for a longer horizon, and if we want to take a good position for an further up move, then definitely we can start adding at current levels, and any deep towards 3,700 zone would be definitely a buy. I believe the stock can go above 4,000 in around 2 to 3 months. But for a short-term trader, I would suggest kindly wait for an breakout of 100 exponential moving average on the charts. 3850 is something I believe would be a breaking point and crucial point for a next leg of up move in very short period of time. So for a positional and long-term trader, definitely a good position to buy. But at any deep around, I believe the stock can go beyond 3,700 for a once. Definitely that would be a good adding position for this stock. So any deep would be a good buying opportunity for long term and positional traders. Short term traders should avoid at current levels. 3850 would be something. After that we can start buying for this stock.
All right, that's the view on a DMart. With that, Jay, hold that thought. We'll come back and speak to you about specific stocks, other specific stocks that will be in focus, and of course we'll be taking up queries from our viewers as well. But let me also bring on board Apurva Prasad, who's the VP Institutional Research at HDFC Securities, to take stock of the IT report card. The big four have reported their numbers: Infosys, HCL Tech, TCS as well as Wipro. So, let's understand how the report card really looks like. And what one should be expecting from IT stocks here on. Great to have you on the show, Apurva. As I was mentioning, Big Four have reported their numbers. The trend has been really set, and in fact, the numbers have beaten muted expectations. So, looking at the top four, which one would you really prefer at the current juncture? Which one emerges as the winner, as a clear winner in Q3? Would you say it's HCL Tech, given the fact that it has beaten revenue estimates and topped revenues and reported somewhere around 6% or thereabouts compared to the other peers?
Good morning. Good to be on your show. So yes, HCL Tech, we were expecting them to outperform in the quarter, and they seem to have done that. Also on the services piece, where the outperformance is not very significant. But yeah, in any case, what it does is it sets up the company for an outperformance for full year in FY24, and this outperformance should also likely continue in FY25 based on where they've exited. So HCL Tech, I would say, would be the best out of the ones that I've reported so far, within the top four, that is. And TCS, relative to some of the headwinds that the company has been facing and what they've delivered, especially on margins with some of their goalposts that they had by end of year, they start a quarter ahead. And I think there is an upside potential in the margins for the company. So different set of reasons, but broadly, with the visibility of some recovery over the next few quarters, and therefore growth rates improving for most of these companies, would be a factor which would be significant. But yeah, what we prefer is in HCL Tech and TCS within the bigger ones. LTI Mindtree, which is not reported so far, that's a preferred pick within the large cap IT space.
Right, so what is the pecking order looking like really? Would you prefer an Infosys versus TCS, given the fact that the stock has also underperformed, right? So relative valuation basis, which one would you prefer now?
So while the historical discount that Infosys has taken over TCS has been about 15-16%, which is where it currently is, I think that TCS should outperform. Rather, the outperformance should continue. Differential is unlikely to narrow. The period where Infosys was outperforming was a period where it was growing substantially over TCS. See that happening over the next couple of years or so. There are company-specific challenges. There is a lot more dependence on the cost element in some of those mega deals, which is not a great starting point currently as things stand. Of course, there is the recovery which is likely to happen in case of Infosys. FY25 for them should be much better. If I look at the puts and takes, I'd still prefer.
Right, Apurva, attrition rate has come down. So supply side things have improved. But if you look at the headcount, second straight quarter of decline, right? Both in terms of Infosys and TCS. Going forward, do you think the trend will continue at least for the first couple of quarters of FY25, or do you think in the fourth quarter we could see some bit of pressure, but aside of that, from first quarter of FY25 we could see some bit of recovery?
Yes, so on the hiring side, we should see some recovery after a quarter or couple of quarters. There is still a lot of capacity sitting, in the form of bench, which gives companies like, for example, in Infosys, scope to improve their utilization. There is still 200-300 basis points for improvement of that as volume starts to kick in. And because the kind of hiring that preceded this period, it just allows them to keep the gross hire levels relatively on the lower side, as well as some of the other hiring methodologies of just-in-time, even on the campus side, has evolved post-COVID. So, which basically allows companies to align hiring closer to demand rather than building that as they did earlier. So I think some of these optimizations would continue. Subcontracting is another form of delivery which companies have optimized, and there is still enough room that would come down with. So the operational levers are looking quite favorable for the company. The fact that attrition is lower than historical average now for companies And the cost of replacement is not really a challenge as for a year and a half. I think those factors should start to help, especially as even onshore wage inflation seems to be coming down. That is a bigger cost element. So with that, normalizing also would be another factor. So margins look quite fair.
Right. From the mid-cap IT pack, of course, you mentioned LTI Mindtree, but anything that's catching your fancy, given the fact that mid-cap IT has performed better than large cap, do you think, valuations are stretched there in the mid-cap IT space?
Yes, so there is a bias that would still keep us calling an LTI Mindtree as mid-cap, out-classify them in large caps. But on a serious note, persistent systems within the mid-caps, I think that offers the best option. Fairly consistent. That all of ours, I think the company should continue to deliver well ahead of peers, and there is scope for improvement of margins there. So I would call out a persistent systems within the mid-cap that should outperform, and within the smaller names, Birla Soft, that would be another company which is turning around and turning around just for the last quarter or so. That would continue, and they could also start to outperform. So these two would be names.
All right, that's the reason. Apurva, thanks a lot for taking out time and joining in. I wish we could continue our conversation, but we are running out of time here. Appreciate your taking out time and joining in this morning. Well, with that, let's go back to Jay. Jay, one stock in focus today, BHEL. It has bagged a mega order from NLC India, right? A 15,000 crore rupee order. So that stock will be in focus. We have a couple of queries on this particular stock coming in from Debu K and a few more people. But given the fact that the stock has taken a breather after the up move, right? Over the last 5 sessions or thereabouts, hasn't really done all that well. It's been pretty much sideways. Going forward, what are the levels you'll be watching out for on this one? Because today it is poised for some bit of up move, right? On the back of this positive news flow. So how should one trade into this counter, particularly for today's session? And if somebody is a medium-term trader or investor rather, how should one look at this?
So definitely you are right. The stock is taking a good support at 9-day exponential moving average, and it's taking a breather since last 1 week, I believe. So the stock would be, I guess, the stock is taking a breath. And currently, if we look at this stop loss levels, 188 would be something we can keep as a stop loss for 21. It's a 21-day exponential moving average, and we didn't see the stock crossing below 21-day moving average in past 1 or 2 months. So bail would be something I would suggest. If the stock cross about 200-day, that's a psychological level also for this stock. We can see a good bit of up move coming in this stock. 212 would be something I would see. The stock is moving in a short term. Particularly today, we can see a good leg of up move coming in this stock. So if you are a trader for a very short term, I guess 188 would be something we can keep as a stop loss. And for the further up move, 212 would be something I would look as a target. But if you are a positional trader, I believe the stock can go further because of the elections and particularly the new order book coming in these public sector companies. So definitely PSUs are in a good spot at current levels, and particularly 240 would be something for a bail I would suggest as a target in very around medium term, that is around 1 or 2 months. So traders can definitely go long on this stock, but it's a caution to keep a stop loss at around 188. Even for a positional trader, just a second. So for a positional trader, 180 would be something that is around 50-day moving average, 31-day to 50-day moving average. So it would be a good stop loss for them also. So stock is particularly behaving in a very good zone. High low is clearly visible on a daily chart, and we can go long on this stock.
All right, that's the view on a BHEL, but lots of queries trickling in on railway stocks. IRCTC, IRFC, Railtel. Anant Upadhyay, Rakesh, Vinay Kumar. They all want to know how to really go about railway stocks now. In fact, Rakesh wants to know whether IRCTC merits a fresh entry at current levels. What would you advise, Jay, on all three stocks, IRCTC, IRFC, and Railtel? How should one approach the railway pack?
So if we talk about IRCTC, on a weekly chart, we saw the stock breaking above its 1 year, more than 1 year levels, that is 911. So on January 2022, the stock has moved above this level. So I am very bullish because we saw breakout and the stock has a further resistance at 1115. So 1115 would be something I would suggest as a target if we keep the stock for 1 or 2 months, because IRCTC, even railway stocks are very good up move. But on a weekly chart, the stock breakout indicates the stock can move further and it has huge upside potential. So keep long on IRCTC. If we talk about IRFC, just a second. So IRFC is consistently moving in a higher high, higher low zones. Flag and pull pattern is clearly visible on weekly chart. The stock is in new high. So I would suggest to keep a caution at on IRFC because the stock has continuously rallied and we did see a major down move coming in, and it is also very far from its 9-day exponential moving average. So I would suggest a caution on IRFC. We can keep a stop loss at around 100 levels and keep a long on this stock, but IRFC would be a little overstretched, so I would suggest a caution. The third would be Railtel, right?
That's correct.
So if we talk on Railtel's position, the stock is taking a breather at 9-day exponential moving average, the support zones. And if we get any deep below 330, I would suggest a buy on dip strategy on Railtel. The stock has been taking a breath, and in past 1 week, the stock hasn't rallied much. So we can start a fresh long position in the stock. The stop loss can be kept at around 326 to 330 zones, and we can go long on this stock. That potential target can be around 390 to 400 zones, but IRCTC and Railtel would be something I would pick from railway sector. I would avoid IRFC for now.
That's the call on the entire railway pack. Hope that answers your queries. But talk about an HDFC Bank. The company will be reporting its numbers tomorrow. There are concerns over, some bit of margin pressure on the back of depository pricing, as well as the fact that it has merged with HDFC Limited, right? But if you compare it with an ICICI Bank, which one is looking more poised for upside on the charts? Because on a 1-month basis, both the stocks have given negative returns, right? And we have a query coming in from Nasir. He wants to know whether there is any upside on ICICI Bank from current levels. What do you have to say about that?
So if we talk about ICICI Bank, even today's my peak was also on ICICI Bank because the stock is holding consistently above 1000 levels, and I'm very bullish about banking stocks, particularly when if we look at ICICI Bank, the stock has taken a good support at around 50-day exponential moving average, and it is currently trading above its 9-day, 21-day moving average. And the stock has seen a breakout above 997. That was a resistance, the previous resistance which we recorded. So currently, we can definitely buy this stock and we can keep a target of around 1040, and we can go long on banking stocks. Even HDFC Bank and ICICI both are looking fantastic because the result has been already discounted, I believe. HDFC Bank has seen a major down move since past 1 week. So we can definitely go long. The same IT sector story can be repeated in banking stocks. So kindly remain long on ICICI Bank as well as on HDFC Bank at current levels.
Right, a couple of more queries I want to squeeze in before we end the show. Rajesh wants to know your thoughts on a polycab, whether to buy at current price for the long term. The stock has shaved off 26% in a matter of a couple of sessions, right? Do you think there has been a breakdown on the charts, or would you say that, use this opportunity to buy and wait for the long term?
So I would suggest kindly wait for the stock for further down move because we can see a rating downgrade, particularly in polycab, and clearly we can see the income tax notices are getting fulfilled. So definitely the stock can move below its 100-day on a weekly chart. So that is placed around 3600 zones. So we can still expect a major down move coming in this stock. The stock has already rallied since past 1 year, so we can definitely see a rebound on the price and we can also wait for the dip to get further stretched. I believe the rating downgrade, the product, the results definitely will get hampered. So I believe if we can get a dip at around 3100 to 3200 levels, it will be surely a good buy for the long term. But currently we need to wait for the little more time, and we can get this stock as a good price. So kindly wait for stock to get further done.
All right, wait for further downside when it comes to this particular stock. But One stock I want to get your thought on is Inbeam. It saw a good rally on Friday at 9% kind of a rally coming in. And we have a few people asking queries about this particular stock. How would you look at this particular chart? How are you reading into it? Funny PG wants to know your thoughts and wants to know whether it is a good short-term or long-term bet.
So Infibeam, the stock, the chart is very interesting because higher high, high low pattern is very much visible. Even the stock has seen a major up move from 24 levels to 27.5 levels in the charts, but that level hasn't been sustained. If we look at daily chart and as well as the weekly chart, the resistance level is clearly visible at 27.5 to 28 zones. So I would see a major dip coming in this stock. So kindly wait for a dip around. If we get this stock around 23 to 24 zones, we can initiate a buy at that levels. But for now, kindly avoid this stock because the stock has been already seen a great major up move in past few weeks, even past few days. So kindly avoid and wait for an downside move. The stock has been overstretched from 9-day and 21-day exponential moving average. The super trend line is quite on the lower side. So 23 to 24 zone would be something I would suggest buying the stock for a short term.
All right, that's just about our last query for today. Venkat wants to know your thoughts on a Praveg. Do you really, track this stock? Of course, it came in the limelight on the back of push towards domestic tourism, right? And the stock, from a penny stock, it has come up to a stock that's over and over and above that 1,000 rupee mark. If you are tracking this stock, really, Jay, what are the levels you'll be watching out for this one? Do you think it's a breakout stock, given the kind of up move it has seen in the last 5 sessions?
So, since Praveg is an Ahmedabad-based company and with Ayodhya Ram Mandir temple news, so definitely the stock has seen a major up move. Particularly, they are into hotel business and they are planning to set up their hotels in Ayodhya. But the stock has already rallied much from, I guess, in 2021 it was trading around 60 rupees, and currently it is trading around more than 1,200 rupees. So I believe kindly avoid this stock for now. There are other opportunities in stocks, particularly hotel space. EIH Hotel, Chalet Hotel, even Indian hotels would be something I would prefer buying for a longer term. They are planning to open new hotels in Lakshadweep, so definitely it can be a good buzz for them. So Indian hotels and EIH Hotel would be something I would be bullish on. So kindly avoid Pravik for now. It is overstretched and it is already seen a major up move since past few days and past few weeks also. So kindly avoid this stock. Go into good companies and particularly like Indian hotels and PH.
All right, look at bigger hotel names rather than a Pravik at this juncture. But with that, we've come to the end of this query segment. Jay, what would you be recommending for viewers this morning in terms of stock recommendations?
So I would be bullish on 3 of the major stocks. Particularly ONGC, we see a second leg of rally, particularly in this stock. The good basin found, the oil found, it's very interesting, particularly in that region. So I would suggest to buy ONGC at current levels. The target would be kept at around 235 zones, and the stop loss can be kept at 218 zones. The stock is continuously moving in high high, high low zones. Super 10 line, the support is very good. So there is no problem coming in this stock. The second would be ICICI Bank, as we suggested in today's query. So ICICI Bank, I am very bullish about this stock, particularly on banking sector. Today we can see a good up move in banking as well as Nifty index. So definitely ICICI Bank would be something I would prefer buying. 1040, that is the first resistance for this stock. So that would be a target for this stock. 1040, 977 would be a stop loss, which is around which is placed at around previous support of 50-day exponential moving average. So the second stock would be ICICI Bank, and the third stock would be on HCL Tech. With good result coming in IT rally, I believe IT rally can continue further. The stock has crossed above the previous resistance 1516 zones, and the stock is currently trading at 1540 zones. I believe the stock can move upwards towards 1600 zones. The target would be kept at around 1620, and the stop loss can be kept at around 1490 levels. So I believe these 3 stocks can be a good pick for today's trade, and we can see a major up move in this.
All right, 3 recommendations coming in from Jay. With that, Jay, thanks a lot for taking out time and joining in and addressing all our viewer queries as well. But with that, we're completely timed out on this edition of Morning Trade. Thanks a lot for tuning in. Of course, we will be watching out for that magical 22,000 figure when we kickstart trade at 9:15 a.m. Let's see whether or not it turns out to be a magical Monday for the markets or not. But with that, I'm out of the studio, but you guys stay tuned because coming up next is Opening Bell.